It's here. The earnings report from a tech giant that everyone has been watching. We could call it a world-stopping event. The company is none other than NVIDIA and will also be covering the interview with its founder, Jensen Huang, on the company's future direction. Hello and welcome to Insight AI Brief. Before you listen, please like, share, and subscribe. Okay, so let's unpack this. There's a palpable buzz, isn't there? A real sense that, the world kind of holds its breath for NVIDIA's announcements. Today, we're taking a deep dive into their latest Q2 fiscal year 2026 earnings report and also digging into those powerful insights from CEO Jensen Huang. Our mission is pretty clear. Cut through the noise, the numbers, the rhetoric, and really get to the most important takeaways. What does it all mean for AI's future?
It's fascinating, right? Because we're not just looking at one company's performance. NVIDIA is... well, it's like a barometer for the entire AI industry. They're just so pivotal. Yeah. And for this deep dive, we've got quite a bit to work with: the official earnings call transcript, their investor slides, and critically, several key interviews with Jensen Huang himself. So we can try to understand not just what happened, but, why it matters so much.
All right, let's jump right into those headline numbers. Q2 fiscal 2026. NVIDIA reported revenue of $46.7 billion, and that actually beat the anticipated $46.1 billion. So, a decent beat there. On the earnings per share front, they hit $1.04, which also beat the forecast of $1.01. And interestingly, Yahoo Finance pointed to an adjusted EPS of $1.05. So whichever way you slice it, strong numbers against expectations.
Yeah, and if you connect that to the bigger picture, this isn't really a one-off. It builds on this incredible growth trajectory they've been on. We're talking 86.17% revenue growth over the last 12 months. That makes it the 9th consecutive quarter, I believe, of over 50% year-over-year growth. Ever since generative AI really exploded back in mid-2023, that kind of consistency is, well, it's remarkable.
Absolutely. Consistent, exceptional growth. That seems to be the story. So where did all that money come from? Let's break down the segments. Data center, that's the one everyone watches like a hawk. In the AI era, it soared to $41.1 billion. That's a massive 56% jump year over year. Really just underscores their dominance, doesn't it? They're the foundation for pretty much every major AI project out there.
It really does. But it wasn't just data center, which is interesting. Gaming had a record quarter too. $4.3 billion. That's up 49% year over year. Still a very strong business for them.
Right. And professional visualization, $601 million, up 32%. And automotive, which sometimes flies under the radar, hit $586 million. That's up a huge 69% year over year. So their reach is incredibly broad.
Yeah, definitely beyond just the main AI narrative. And, beyond the top line, profitability looks really solid too. GAAP gross margins were 72.4%, non-GAAP at 72.7%. Those non-GAAP figures, they often give you a clearer view of the core operational health, stripping out some noise, and they returned $10 billion to shareholders, buybacks, dividends. Plus, they approved another $60 billion for share repurchases.
Wow, okay. That $60 billion authorization, that's a huge signal of confidence from management, wouldn't you say?
Absolutely. It tells you they're very confident in their future cash generation and growth prospects. You don't authorize that kind of buyback lightly.
Okay, so here's where it gets, well, a bit confusing maybe. Despite these really stellar numbers we just went through, the stock actually dipped a bit. It fell around 0.18% in aftermarket trading. Some reports even had it down over 3% after hours. So, strong performance, negative reaction. What gives? What's the market telling us there?
It's intriguing, isn't it? It seems that the market reaction wasn't really a rejection of the overall performance itself. It was more about incredibly specific, maybe even overly optimistic expectations baked in. That data center number, $41.1 billion, huge number, but it was technically just shy of some analyst targets, which were closer to maybe $41.34 billion.
So we're talking fractions of a percent difference being enough to disappoint.
Kind of, yeah. And you have to remember the run-up. The stock was already up massively, like 35% year-to-date, doubled from the April lows. Investors were positioned for just an absolutely epic beat, as they say. Investing Pro Analysis even flagged it as potentially overvalued beforehand. Plus, you hear some chatter about maybe investor fatigue with just pouring money into infrastructure. People want to see the killer apps emerge more concretely.
Right, the show me the results beyond the hardware spend sentiment.
Exactly. So the dip seems more about that super bullish short-term positioning and maybe some profit-taking rather than, a fundamental rethink of the long-term AI story.
Okay, that makes sense. Pricing and perfection, basically. And you mentioned another factor potentially weighing on sentiment in China. That uncertainty keeps cropping up, doesn't it? Potential restrictions on chip shipments. What did Huang say about China this time?
Yeah, China's definitely a big piece of the puzzle, and a complex one with the geopolitical situation. Jensen Huang was quite direct. He sees China as a huge market, potentially $50 billion this year, growing maybe 50% annually. He pointed out, half the world's AI researchers are in China. They're producing top open source models like DeepSeek, Kimi.
So he sees it as a vital innovation hub, not just a market.
Exactly. And he strongly advocates for U.S. tech companies being in that market. He mentioned potential H20 chip sales. Those are the adapted chips for China. Could be worth $2 to $5 billion in Q3 if things get resolved. And he hopes the Blackwell platform gets approved for sale there eventually. But for now, it's a big question mark. It wasn't included in their Q3 guidance.
Okay, so potential upside there, but also a source of risk the market is clearly watching closely. All right, let's shift gears a bit. We've covered the numbers, the market reaction. Let's zoom out to Jensen Huang's broader vision. He's talking about a new industrial revolution, declaring the AI race is on. That's big language. What's the substance behind that vision?
It's incredibly ambitious. He outlines several key pillars. First, what he calls reasoning agentic AI. Think beyond the chatbots we use now. These AIs could actually think, plan, reason, do research, use tools like Excel or a web browser autonomously.
So not just responding to prompts, but acting like intelligent agents.
Precisely. And this leap requires vastly more computation, he said, 100 to 1,000 times more, especially for token generation, the actual output process. But the payoff is huge. Significantly fewer hallucinations those errors AI makes, which unlocks much more reliable, powerful enterprise applications.
Okay, that's a profound shift. More compute, but potentially much smarter, more reliable AI.
And that reasoning capability directly fuels the next part: physical AI and robotics. NVIDIA's vision is that every industrial company will eventually need two factories. One makes the physical stuff, the other builds the AI, the robotic intelligence. Platforms like Omniverse for simulation, Isaac for robotics development, the new Thiace or robotics chip, they're all building blocks for this.
Two factories. That really paints a picture of how deeply integrated AI could become in the physical world.
It does. And they're even building tools like the Cosmos World Foundation model to simulate physical environments for training these robots. Plus, Project Digits aims to put Grace Blackwell supercomputing power essentially on a developer's desktop, democratizing access to build these complex systems.
Bringing supercomputing to the desk, that's wild. So the core engine for all this remains their chips, right? Blackwell and beyond.
Absolutely. Blackwell is the star right now. Huang calls it the next generation AI platform the world's been waiting for. The really revolutionary part is the NVLink 72 rack scale design. It essentially turns an entire server rack into one giant unified computer. This gives apparently an order of magnitude speed up and 10 times the energy efficiency for token generation compared to Hopper, the previous gen.
An order of magnitude and better energy efficiency. That's crucial at these scales.
Hugely important. And Blackwell Ultra is already ramping up production at full speed. Demand is extraordinary.
Yeah.
And they're not stopping. The next platform, Rubin, with 6 new chips, is already in fabrication, on schedule for volume production next year. They're sticking to that relentless annual cadence.
An annual cadence at this level of complexity is just incredible, and all these powerful computers need to talk to each other. Well, what's the networking strategy?
Critical point. Huang emphasizes this fusion of computing, networking, and software. It's not just about the GPUs. They now have 3 networking tiers. NVLink for scale-up, connecting those 72 GPUs in one rack. Spectrum X Ethernet for scale-out, that's their enhanced Ethernet for AI. Low latency, already a $10 billion annualized revenue run rate business.
Wow, $10 billion just from the AI networking.
Yep, and the new one, Spectrum XGS for scale across. This is designed to link multiple AI factories together into gigascale superfactories. CoreWeave, a big cloud provider, is already using it to double their GPU to GPU communication speeds between data centers. It's all about removing bottlenecks.
So it sounds like even with Blackwell ramping up, demand is still just outstripping supply?
That's the message. Really, really high demand, as Huang put it. H100s, H200s are sold out. Major cloud providers are renting capacity because they can't get enough hardware. NVIDIA is projecting a mind-boggling $3 to $4 trillion in AI infrastructure spending by the end of the decade. Think about it. Top hyperscalers are already spending $600 billion a year on CapEx, nearly double from 2 years ago. NVIDIA figures their tech makes up about 35% of a big AI factory's cost.
3 to 4 trillion. The scale is almost hard to comprehend. So pulling this all together, what's the immediate outlook? Q3 guidance, and what should we be watching?
The Q3 guidance is strong. Revenue projected at $54 billion. Gross margins expected between 73.3% and 73.5%. And crucially, remember that $54 billion doesn't include any H220 chip sales to China. So there's potential upside if that situation changes.
Okay, so strong guidance with potential upside. What are the key drivers we should keep an eye on?
Well, the core drivers are still firing. Just relentless demand for AI infrastructure, the push towards that more capable reasoning and agentic AI needing more compute. Then there's the global build-out of sovereign AI nations wanting their own AI capabilities. That's expected to hit over $20 billion this year, doubling from last year. Plus, growing enterprise adoption and that whole physical AI and robotics market starting to take shape.
And product-wise, it's all about Blackwell ramp and then Rubin.
Pretty much. Full Blackwell ramp, Rubin development, staying on track. Huang mentioned Rubin will have a much more mature and fully scaled up supply chain, which is key, and continuing that annual cadence for networking gear too. But, of course, there are challenges.
Right, the inevitable. What are the main headwinds?
China remains the big one geopolitically. Potential restrictions, especially on future platforms like Blackwell, that's a constant uncertainty. Competition too. Huang tends to downplay the threat from ASICs, those custom chips. But lots of companies, including major cloud providers, are developing their own AI silicon. That race is definitely heating up, and, the usual suspects, potential supply chain hiccups, broader economic pressures. It's never a completely smooth ride.
So, navigating those challenges, what's the ultimate trajectory? Where does Huang see this ending up long term?
The vision is just continuous scaling. He talked about going from thousands of hoppers in tens of megawatt data centers to hundreds of thousands of Blackwells at 100 megawatt facilities now. And then soon, millions of Rubin GPUs powering multi-gigawatt, multi-site AI super factories. The scale just keeps multiplying. As he puts it, the opportunity is immense. They clearly believe we're just scratching the surface of this AI industrial revolution.
Wow. What an incredible journey through NVIDIA's latest quarter and Jensen Huang's really expansive vision. It just underscores how much is happening, how fast it's moving, right at the foundation of AI.
Absolutely. And maybe if we connect this to the bigger picture for you, the listener. Think about this relentless innovation pace. Think about that drive for physical AI. How could that reshape not just big industries, but our everyday lives? The intelligence in your next online chat, sure, but also the robots in factories, maybe autonomous cars. It raises a really important question, doesn't it? How quickly do we adapt when AI isn't just processing data, but actively thinking, reasoning, interacting with the physical world? And what does that mean for us, for human roles in the next 10 years?
That's definitely something to chew on. Thank you for joining us on this deep dive into NVIDIA. We hope it's given you some surprising facts and maybe a shortcut to being well informed. Don't forget to follow, like, and share. Join us again for another great analysis. Thank you.